Hello. Welcome now, Stock Trades. This video is going to be an important video. My recommendation is you share this video to people on Stock Twits and other folks and other forums. This is a very incredibly important video. So we had a live yesterday and we were talking with all of you guys on YouTube. And then after the live, I stayed working, right? I was doing the papers and going through the document from the SEC 10Q. And I found something and I said, holy shit, this is a big deal. So immediately I went ahead and informed my lifetime access community. I said, hey, if anyone's up right now, join me in the video channel. I got to show you something. And we did that. And unfortunately, I recorded it, but I didn't record audio. So we're going to go ahead and talk about this. Is a very important video. Okay. If I were to summarize yesterday, if El Jefe, if you're here, if you are here, add a sentence or two, go ahead and summarize that. But if I were to summarize it, Clover Health is going to be a free cash flow machine. Okay. But there's more. Right after that night live with just our clients on the lifetime access, we then, I stayed after that. My dog was like, come on, man, let's go for a walk. And I found something very crazy. Clover Health, I think, will be profitable this year. Did you hear what I just said? Clover Health is about to be profitable this year. Okay? It's insane. So let's go. Shant had a link. I have a headache in the left side of my head, unfortunately. Sucks, but we have to continue. Good night from Belgium. The man, the myth, the legend. What's up? What's going on, Dr. Patel? You're going to love this. I uncovered something very, very, very deep. Okay? Listen, guys, we're going to go pretty deep in the financial statement analysis. Okay? So we're going to go deep today, okay? All right, so let's go ahead and explain kind of where we're at. Okay, Sweden, love you too. Absolutely, love you guys. You guys have good chocolate. So this is the fourth quarter results of 2024. I'm going to scroll down to the cash flow statement. I like this because it gives you the cash flow statement. Even it's consolidated again, it's fine, but it gives you a lot of the data. 2024, 2023, and 2022. I like this because it gives you 3 years of information all in one. Okay. Okay. Then I'm going to open up the first quarter of 2025. This was this week, this past week, right? So I'm going to go ahead and I'm going to scroll down and I'm going to go to its cash flow statement. Right? So very quickly, there's not YouTubers out there that know how to read this information. I mean, let's just put that there, right? This is one of the fewest channels that actually goes into deep financial analysis. I'm telling you right now, and let me just, before I even start, all you motherfuckers watching right now, you guys are going to be one wealthy motherfuckers. I'll tell you that. You guys are going to be very, very, very wealthy. Excuse my language, but you guys are going to be really, really wealthy. You understand what I'm telling you? You guys are about to be incredibly, incredibly wealthy. I had to call last night my father-in-law. I had to call him and I had to say, you need to drop $25 million right now in Clover. You need to drop it right now. This is a big, big deal. Big deal. Okay? So I'm excited because this portfolio now, this will be the public portfolio. We're going to be doing the options on this. We have a larger one, but that's mixed in with my significant others. I can't even imagine what this is going to look like in the next 3 to 5 years. It's going to be such a great way to use it for our lifetime members when we use the wheel strategy to do the options. So to go ahead, Rick, you're just in time. This is a big deal. I would rewatch right now. This is a very big deal. Okay. Al's genius. I just work hard. I just stayed up last night and I worked. I was digging deep. I'm like, this doesn't make sense. Okay. I think so. So if you have a question, please put it in the chat box. If you have a question, put it in the chat box. Okay. All right. So first things first, we're going to look at Q1 2025. Here it is, right? 3 months quarter, right? The big thing here is unpaid claims. Remember we were talking about it and I said, give me some time. Let me figure this out. Unpaid claims went from a positive operational cash flow of 102 million to 5.3 million. All you have to do is these numbers are in thousands. You have to divide by 1,000. So they went from 102.3 million to 5.3 million in the negative. So what does that mean? Clover Health was artificially increasing its cash flow last year. Why do I say artificial? Because these are unpaid claims. Unpaid claims to who? You know, I could get demonetized, guys, by cursing. I could tell you, right? I just should tell you, I don't give a shit about demonetization. I have a lot of money. I don't care about monetization, all this other crap. I care for you to understand what this is about to happen. You have all these people sleeping on this stock, and I'm telling you, this is a big deal. So what is unpaid claims? What is that? Okay. Unpaid claims is a doctor essentially doing his work and doing his hard work and submitting to Clover, hey, this is what I did. Please pay me. So they had $102 million in Q1 of 2024 last year that artificially increased the operational cash flow. So essentially, they were paying claims a little slower than what they did, right? So doctors had to wait a little longer, okay? So what that did, it is allowed Clover to hang on to that cash, which increased OCF, which then increased FCF. This year, they actually did the opposite. They paid claims back to the doctor fast to a point where they overpaid. So why is that important? Well, I'm going to tell you. The reason why it's important is because if I'm a doctor and I have to wait for damn claims, I'm going to be pissed at Clover. I'm going to say, God damn, Clover, give me my money, right? I'm here working my ass off. I'm working as a doctor and Clover's not paying me. So what Clover's doing now is Clover is paying them fast. Why is that important? Well, if you have Humana and all these other people pulling out, doctors now are going to say, well, shit, Clover Health is paying me damn fast. I like this insurance. I'm going to start recommending this insurance. I like the counterpart. This is a damn good insurance. Okay? Doctors will push us. Teach us, Sensei. You got it. You got it. Okay? So there's that. So now the question is, what was the unpaid claims for 2023 and 2022? Well, if you conglomerate all of the unpaid claims at the end of the cycle for 2024, let me tell you, it's right here. Clover, 2024, 2023, and 2022. In 2022, at the end of the year, Clover had $1 million in unpaid claims. In 2023, they had only $294,000 in unpaid claims. In 2024, they had $19.2 million in unpaid claims. So the question now is why? Why did that increase? Right? It's why. And I think it gave them an opportunity to buy back their stock. So doctors had to wait a little bit. They had to wait. So B-Rad saying yikes to an extent. Because if you were to calculate the free cash flow now by removing this 102, technically last year in Q1, we were negative. We were negative $75 million in free cash flow. Last year, we were negative, ladies and gentlemen. That's why the stock dropped. The stock dropped to 60 cents. But then something happened. Q2, Clover became profitable. Right before, in Q1, they announced that they are going to be buying back their shares because of delaying potentially unpaid claims. They had to. And now this year, they're like, I'm going to pay you guys faster. Okay. All right. So I'm going to repeat. In 2024, 2023, and 2022, here are the unpaid claims. They're usually, we can average them around $0. Okay? So now the question is, if we can assume in 2025, they're going to be around $0, how much operational cash flow are we going to get? Because this is cash flow from operations, which is 82.4 million, right? We subtracted 47.6 million because of discontinued operations, because remember, they had to pay ACO, right? They had to pay ACO, which then dropped them to 34.84 million. So what we can do, B-Rad, and what I'm going to show you is I'm going to go ahead and I'm going to take a screenshot of this so we can do some math. Is Google not working? What the hell's going on? You see this? There. What the hell is this? All right. Okay. Now I'm going to give you the numbers. What am I trying to do right now? I'm trying to see how many goddamn birds are in this goddamn bush. Because I'm trying to make money and I'm trying to help you make money. Okay? Now I know, yeah, they won't let me do it. Right? So now, it smells like Mexican food outside. All right. So now we're going to go ahead and we're going to do smells like burnt Mexican food. It smells like crap, honestly. They burnt the food. Sorry, guys. Smells really rank in here. All right, so getting the neighbors burning the food here. All right, so 2024. Okay, no, we want to estimate 2025 cash flow. Okay, let me go ahead and increase this so we can see. So I'm trying to see OCF for this year. So what do? We're gonna do. Yeah, Michelle, help the neighbors cook right. I know. Turn down damn AC. No, all right. We're going to have a bear case. We're going to have a bull case. Why am I doing a bear case and bull case? Because what I'm going to do is I'm going to do the operational cash flow of 34.8 million as the bear case. And then I'm going to do the operational cash flow as the bull case. B-Rad, for this year, which one should I do? The 82 or 34? Which one should I do? The 82 or the 34? Someone answer me. Well, the 34 is for the bear case, but here's the thing. What does discontinued operations mean? Discontinued operations means that, so B-Rad, are you telling me that they're going to have another 47 million of discontinued operations? Do they have another ACO payment that they have to do in 2025? Ah, you see. Okay, good. Good. But because I'm conservative, I'm going to use both numbers. I'm going to use the 34.84 as the bear case, and I'm going to use 82.4 as the bull case. Does that make sense? I'm going to use both so we can get a range, so we can get closer to the truth. Does that make sense? Good. Excellent. Because what kind of, finance YouTuber do you want to watch? One that gives you bullshit, bullish matrix, or one that says, you know what, let's do both. Let's do both. Right? So we're going to start this and we're going to say 34.845 million. And this is 82.45 million. Okay. Now, what I'm going to do now is I'm going to subtract unpaid claims. Why am I going to subtract unpaid claims? Well, if they're going to be paying their doctors faster this year so they can essentially love Clover Health, then I'm going to assume unpaid claims are going to be near zero, which is kind of what there are here. Who knows? Maybe it might be -5 or -10. I'm going to make it flat. So I'm going to remove 19.296. So I'm going to go ahead and I'm going to say add. Wait. Yeah. I'm going to say, I'm going to say minus. Then I'm going to say 9.296. I'm subtracting now 19.296. Okay. So I'm subtracting this. Okay. And then all these other numbers here, we can do a deeper dive and figure this out and figure out all these other numbers. But that's why we're doing the bear case and the bull case, right? So hopefully maybe this 47 million may come out here to where we get a range. Does that make sense? So let's update. So I'm going to take 3419, okay, and I'm going to just subtract them. But wait, there's more. There's more. Ladies and gentlemen, before I even tell you the answer, because this is an educational platform, somebody tell me, what does net income mean? What does net income mean? What is the equation? The bottom line, revenue minus all expenses. Okay? So if I have more expenses than revenue, what's going to happen to me? Am I going to be positive or negative? If I have more expenses than revenue, am I going to be more positive or am I going to be more negative? Answer in the chat. Exactly. Revenue minus cost. Exactly. You're going to be negative. Negative. Exactly. So if I have more, if I have more expenses than revenue, then that's it. I'm negative. Okay. So if I have a negative net income, does that lower or increase or does not affect the cash flow? You have three choices. If I have a negative net income, does that increase my free cash flow, lower my free cash flow, or does nothing? It's not related. They don't mix. Does net income impact free cash flow? Answer the question. It lowers it. Exactly. Ladies and gentlemen, congratulations. You now know more than 98% of all people in the United States when it comes to this. But it's not about knowing this. It's about how can we use this to make money. A negative net income lowers the free cash flow. So then now we look at this now. Okay. In 2022, first off, what is this? What does net loss mean? Do you see this? What does net loss mean? That's another way of saying negative net income. Does that make sense? Net loss means negative net income. And that's why it is in the cash flow statement. So what is then? So in 2022, Clover had $339 million in negative net income. In 2023, they had $213 million in negative net income. In 2024, they had negative $43 million in negative net income. I recommend, John, rewatching this. I recommend rewatching this. Okay? So what happens? Tell me what happens if Clover becomes okay. Well, before we go there, what was the net loss of Clover in Q1 2025? The one that was just this week. Answer me. What was the net loss of Clover for Q1 2025? Answer the question. Exactly. Where do we find that? Right here on the cash flow for 2025. Net loss is minus 1.2 million. And last year's, what was the negative net income for Q1 2024 last year? Negative 19 million. They went from negative 19 million to negative 1.2 million. Minus 1. Good. So what's going to happen to this number of net loss when it comes to the free cash flow? Are we going to lose another 43 million in 2025? Yes or no? Are we going to lose another 43 million in 2025? Yes or no? No. Exactly. No. Exactly. Exactly. Because we're not going to lose 43 million, can that act? Can we add now 43 million to our cash flow? Are you seeing what I'm saying? Because I'm going to ask this question now, different question. Yes. Yes. Because the 43 million now is subtracted. If you add all these numbers together, the parentheses are negative. If you add all of them, you'll get 82. But if you go ahead now, you no longer have a negative 43 because we're trending to break even to profitability. And I'm going to let you know after this, we're going to get to profitability. So we're going to start even adding more. So if, let's say in 2025, this was 0, could we say that we no longer have to subtract 43 million? If we don't have to subtract 43 million, then we can add 43 million. Does that make sense? Ladies and gentlemen, does that make sense? Why I am going to be adding 43 million here? 43 million, I'm going to add now. Why? Exactly. I'm adding because we're not going to have a net loss. We're going to be break even. We're going to be break even. Okay. So I'm going from negative 43 to 0. So that means I can add 43. So now let me ask you now. What happens when Clover makes a profit? Let's say they make another 40 million in profit. I can add another 40 million. That's 83 million. Does that make sense? Does that make sense? Exactly. You guys get it. I appreciate you, Vince. So I'm going to repeat again for people that are, no, brother, I'm dumb. It's okay. I'm going to repeat again. No, it makes perfect sense. Okay. But just in case, I'm going to repeat again. Okay. Because 15 years ago, I never understood this. Okay. So I right? No, because this is a big deal. Okay. Right now, I am trying to figure out how much cash flow is in this year. Okay. because Clover was negative $43 million in net income, that negative net income translates into cash flow because it's cash flow they have to spend out. Okay. And because that happens, they essentially lose that money, right? They lose that, right? Because now Clover went from, they're only down negative 1 million, and they're going to be break even from this example. I think they're going to be profitable, but I'm going to show you the profitability. I cannot show you that before you don't understand this. Okay. So if they're break even and they're at zero, that means you don't have to subtract 43 million from the cash flow anymore because their net income break even. That's why I'm adding 43. Does that make sense? Okay. So there's that. Okay. So now that we added our 43 million, this is where the 43 million came from. This is from the net income going to break even. Okay. Okay. Now what else can we do? Okay. So 2024, what do they do? Okay. Treasury stock acquired and repurchased. These are all things that decreased the cash flow. And I'm going to talk about treasury stock. A lot of people say, well, they can't really buy treasury stock. I'm going to explain it to you guys in this video. It's very complicated. I'm going to explain it to you and you will understand. I am not going to include the treasury stock in this calculation. Just understand it makes the argument even more bullish. This is a free cash flow generating machine. Okay. But you see right now here, the repurchase. In 2024, they repurchased $1.77 million in stock. 1,772. Does that make sense? Does that make sense? They bought 1.77 million last year. So if they spent 1.77 million, we could definitely add and subtract that because that's something that we're going to, but they also spent 18.2 million this year, right? So that's something that is going to be gone from free cash flow. Just out of all intents and purposes, we're going to forget the share buybacks and we're going to add them later. Okay? We're going to add them later. Okay? So now what we're going to do is we're going to add these together, right? Let me think. Let me make sure together. So let me just go ahead and make the bear case. So the bear case is 43 plus 34.845 minus 19.296. So the operational cash flow for Clover is going to be 39.253. Okay. This is for the bear. Okay. This is OCF estimation 2026. Okay. Now, a couple of disclaimers. You can add another 1.77 million because that's free cash flow that they're going to have from last year. So that's like 41 million. But then you would have to remove 41 million minus 18 million, which is 24 million. So technically it's anywhere between 24 to 39 million. Why am I removing 18? Because they just spent $18 million of cash this quarter, right? They spent $18 million in cash because they bought back their shares. Where am I getting the 18 million? Right here, guys. They spent $18 million right here. They spent 18. Sorry, my bad. I wasn't sharing. So they spent $18 million here to buy back their shares. So let me just show you. So the bear case, my apologies. Sorry about that. Not sharing. Sorry. So 43 million plus 34.845 million minus 19.29 million. Why am I minusing this? I'm assuming unpaid claims. Remember, it was 19 unpaid claims right here. I'm assuming that they're going to be, if I can zoom in a little bit more, I'm going to assume unpaid claims are going to go to zero. So I'm subtracting it. So you get 39.253 million. Now, obviously, last year they did a repurchase of 1.77 million. So you can add that there. So it's going to be like $41 million. But you can also, but the thing is, if you're adding those share buybacks, you also have to subtract, if you want to be really accurate, you have to subtract 18.2 million, right? You have to subtract that out because that's how much cash they spent, right? They spent 18.29 million to buy back their shares in Q1, which is this year, Q1 2025. So you have to subtract 39.253 minus minus 18. So technically, the bear case, they'll have 23 million in operational cash flow this year. If they're at break even and if they're at a bear case. Obviously, this is the bear case, which is not true because the discontinued operations is 47 million, and that's subtracted out. And that is not going to happen this year. Does that make sense? So, right. But then the reason why I didn't have that is because you have to subtract. John, you have to rewatch because I talked about unpaid claims. You have to subtract unpaid claims, right? So you have to rewatch the video, okay, to understand why I'm subtracting out unpaid claims. Okay. Okay. So now let's calculate the bull case. Right. So to calculate the bull case, you do 43 plus 82.450. Then you subtract 19.296. That'll give you 106. So this is the bear case. This is the bull case. Right? And then we can do the intra range of the bear, which is anywhere between, if you really want to be heavily accurate, we could take the 39.253 million, add back the share buyback that we know is not going to happen, that they did in 1.772 million, add that back, but subtract the share buyback they did this year, which is 18.2. And by doing that, the absolute worst case is this. And then you do the same thing here, but you do 106.154 subtracted from the 18.2. And to do that, you go 106.154 subtracted from 18.2. You get 87.945. So the absolute worst case is going to be 22. So it goes from the scale now goes from worst to best. So it can right now go from 22.825 towards 106.154. And this is the OCF. Oh, wait a minute. Did I not add it correctly? Hold on. Sorry. 43 plus 34. Oh, shit. Son of a bitch. Okay. My bad. Hello. All right. So let me go. Guess what? Is that better or no? So the mistake I made is does it make Clover look better or worse? Right? My apologies, John. Right? This is better. You see how conservative I am? I just like to take from the cash flow. It definitely makes it even more sexier. Exactly. So that's good. It's good. So I'm sorry. You see how my mind always is more conservative. I don't like to add numbers, which is good, good for us. Okay, so if you subtract 77.854, my apologies, John. My apologies. And then you subtract 19 point. Now I have to do this all over again, like a freaking retard. That's 58.54. Mm-hmm. You see, that's why I need you guys. That's why I need you. So we're gonna do this right here. We're gonna add this here, and we're gonna go ahead and now do this. We're gonna add that. We're gonna subtract 18.2. Now it's the worst case is 42.1. Shit, that's really good, guys. By the way, these numbers are in millions. Now you got me freaking scared. Did I add this one did I add this one correctly? For my dumbass messes this one up. Okay, I added this one correctly. Okay. We just have to tell yet until okay, good. Best portfolio absolutely. Okay, good. So then now we got to you see how this changes now? Now this goes to 42.12. Okay? So now this is the first calculation, and this is break even net income. Okay? Okay? So now we're estimating free cash flow, and at a break even, it's going to go from 42.12 to 106.154. But that's net income at $0. Because we added the 43 million because we're not going to have that $43 million loss like we did in 2024. That's something we can add back to the cash flow. So now, how do we now? Okay, so then now we have to ask the next question. Okay, well, Al, what's the estimation of potential net income this year? And this brings us to the next level. You see how it took us 40 damn freaking minutes just to do that, right? So then now you have to go do the other one. Okay, let me see. Yes, this actually causes me to revise my price target. So I'm gonna once we go ahead and do all this now, we're gonna go ahead and set up the price target. Whoa, it's gonna be really good. Okay, so check this out. All right, so all right, so to answer this question, we have to now go back to this graph. Okay, so this numbers I got from Q1 2024. These numbers I got from Q1 2025. Simple enough. I calculate the percent difference, which is this. Okay. I'm going to take the percent difference from Q1 2024 and the percent difference from Q1 2024 to Q1 2025, and I'm going to apply this percent difference to Q2 2024, Q3 2024, and Q4 2024. And then I'm going to get the potential projection of Q2 2025, which is in the next 3 months, Q3 2025, and Q4 2025. Does that make sense what I'm doing? I'm going to do it in front of you, but I just want to make sure you understand the plan of action. Okay? Does that make sense? Excellent. So I'm taking the net difference from Q1 2024 to Q1 2025, given that they just reported, I can find the difference, and I'm going to apply it now. Instead of Q1 now, it'll be Q2, Q3, Q4 of 2024 to project Q2, Q3, Q4 of 2025. Okay, perfect. Now, individuals that are watching, if you want access to our lifetime access, and if you want someone who actually understands what they're doing, gives you access to the data, gives you access to the research, you know where to go look for. This is the most undervalued product that exists online. There, as you can see, we just had a testimonial video from Sean, and he said it. We have no competitors. We have no competitors because I've designed something that does not exist for retail investors. Okay. All right. You can watch the testimonial. It's in the video section. All right. So now that we're doing that, I'm going to go ahead and copy the percent change, and now I'm going to bring it here. So there it is. Now you see this? So now I'm going to go ahead. I'm going to say Q2 2025, Q3 2025, and Q4 2025. I'm going to estimate it, okay? Right? So what am I going to do now? What I'm going to do now is I'm going to give you, we're going to, so how, okay. So, all right. So how do I find this? How do I find these numbers? I got to go to Q2, right? So I'm going to go to Q2. How do I do that? Okay. This is why they bought back the stock. Exactly. 10Q is a good place to look. Yeah, you could, exactly. You could do that. For just easy purposes, I'm just going to do these ones because they do so good at giving you the data, right? So I'm going to go here, and we're just going to go here. We're going to find the income statement. Okay. And I'm going to take these again. This is for, to be clear, this is for the first quarter. We did the first quarter. Now I need to do the second quarter. Okay. So let me be clear. The first quarter, I can't speak. Jesus Christ. The first quarter, I didn't have to do because Clover already gave me the first quarter. That's how I was able to find a percent change. Does that make sense? So all I got to do is look at the second quarter. Okay. All right. So I'm going to ask you right now, and I'm going to just show you here. Second quarter. Give me a moment. Let me find it so I don't. Hold. Okay. Good. All right, I'm going to ask you this question. This is Q2 2024. Were they profitable? Analyze the document. Were they profitable? Yes, this is last year. Q2 last year, 2024. Were they profitable? Yes or no? Answer the question in the chat. Go. Yes or no? Were they profitable in Q2 2024? Yes. We get this right. You will be able to fly her to Italy. What's going on? Oh, it's supposed to take my wife dinner. I told her we gotta wait. Oh no, this yeah. Tell her she's to watch, right? Since I'm a pilot, I love to have my own plane. Absolutely. So good. 7 million for individuals that were like, how the hell are they getting this? Right here. Income loss from continued operation. Remember, parentheses means it's a loss. Right? There's a lot of people that are retail investors that think this is a loss. But it's because in accounting practices, parentheses means it's a loss. This is a profit. Because if you take total revenues subtracted by operating expenses, you all you got to do is take 356 minus 349, and you get around 7, which is what this is. Okay? All right. So then now I'm going to go ahead and I'm going to take a screenshot of this. Why? So I can put it to my right screen. Remember, I have a triple screen setup because that's how I do business. I'm going to look at now, I'm going to go ahead and I'm going to input the data that I took the screenshots, right? So I can input the data. Okay, let's input the data. Okay, so premiums earned 349900. And automatically, what this is doing, it's projecting how much premiums they're going to earn in the next 3 months because we know they're growing on average 33%. Now, what I think is they might actually, because they said they're going to grow 37%, this still may be an undervaluation. Okay. Other income, 6360. Net medical claims. These are your expenses. 2, 4, 8, 3, 4, 7. Where am I getting this number from? I'm getting it from here. Where did I get other income from? Here. This is not rocket science. I'm teaching you a language, how to read a language, and how to make money and retire your family. Salaries and benefits, 55499. General administrative expenses, 44424. Depreciation and amortization, 330. Ladies and gentlemen, this was the net income. I'm going to hold on before I let me show you. We said they were profitable by 7.6 something million, right? Around that. Ladies and gentlemen, what does it say the net income will be for Q2 of 2025? What does it say the net income will be? Exactly. Are you seeing this? If you don't believe me, we went from negative 19 million to negative 1. Are you seeing this? Are you seeing this? $37 million. Okay, Q1. Q1 was negative 1 million. If you add negative 1 to 37, what is that? 36 million. This is profit. This is profit. So what is that profit going to do? Where is it going to go? It's going to go to the free cash flow. It's going to make the cash flow go higher, which makes the intrinsic value go up. Do you understand what I'm saying? So that's what it looks like. It looks like they're going to have a crazy, crazy profitability in Q2. Holy shit. Andrew, Peter, you motherfuckers. I see you. I see you. I see you. There it is. There's your net income, 37 million. 37 million. Forget the projected Q1. I mean, it's going to be it's going to be 77 million next year, right? Forget the projected right now. We're not going to worry about that. Today, I want to worry about this year. Okay? So there it is. Here it is. So then now Albert's translation, 37 million. Okay? That's the net income for this year. Okay? So let's go ahead and let's put in our notes. Let's put a notes here. Okay? Or we'll do it later. Okay. All right. So now let's just focus on this. Forget this. This will be another video. Okay? Let's break it one at a time. Okay, now who wants to do Q3? Do we want to know what Q3 looks like? Anybody? Right? I agree with you, Sarah. I agree. Al, you're doing an incredible work here. I'm heavily involved in in the Palantir Hood community, and I can't seem to get a lot of people in those communities to take CLOV seriously. Well, you know what? Sarah, unfortunately, it takes time. It takes time, right? There's a lot of hidden stuff in this balance sheet. You really have to dissect it out. I think once they become profitable, and maybe a year or two from now, once the stock price goes over 5, 10, then they're going to be like, holy shit. And then everyone's going to start typing. And it's okay. But guess what? That's when I'm going to be making most of my money, right? Because I already bought, right? Woo, right? All right. So excellent. I appreciate you, Sarah. Appreciate you. All right. All right. So then now, let's go ahead and do Q3. So where are we going to get the information from Q3? Well, the same way we got Q2. I mean, this ain't rocket science, isn't it? So let's go ahead. All right, so okay. All right. Okay. All right, here it is. Okay, obviously, just to save you some time, this is the loss. So they lost around $8 million. Sorry, net loss. They lost about $9.1 million in Q3. Right? Oh, hello. What I'm going to do now is I'm going to take a screenshot, and then I'm going to go ahead and calculate the value here. So let's do it. So premiums earned, they did about 322,579. Other income. And by the way, this is like of 3 months ending, so it all adds up. So 8407. So you got to add it up a little bit. Somewhat. Yeah, you could do that. And I'll explain kind of what it is. Net medical claims is 249, 774, 54, 995. Salaries and benefits. General admin 35201. 339. They had like a minus restructuring recovery costs. I don't know if they're gonna have that. So okay. It's discontinued, so that's fine. Okay. All right. So now that you know this, what does it say that Clover is going to be for Q2? It'll be what? What does Clover say it's going to be? Went from negative 9 million to what? Negative 9 million to what? Q3. Wait, am I doing this? Sorry, this is supposed to be Q2. It's okay. It's still. Let me just do this. Q3. There. Here. This is the better screenshot. Okay. Now, what does it say for Q3? I misnamed it here. The math is the same. So what does it say? It went from negative 9 million to 11 million. 11 point. So we're going to be profitable again in Q3. We're going to be profitable. But wait. Okay. Wait. Here's net loss, right? You have discontinued operations that won't come back, but then you have net loss from continuing operations. I don't know if this may come back. This may come back. I would have to dig deeper through the sheets to see if I can remove that. I like to be conservative, so I'm going to add that as a loss. So I'm going to subtract 8785. So I'm going to take this here. I'm going to put it above. I'm going to say 8785. I'm going to say equals. I'm going to say, wait, let me just do a number. I'm going to say equals. I'm going to say this, subtract from this. And you get $3 million in profitability still. So I'm going to take this number instead. Right? Wait, what's wrong? Am I wrong? What did I do wrong? Exactly. So this is what why are we taking 8785? Because look, it was subtracted from here. Wait a minute, let me see. Oh, wait a minute. Am I reading this wrong? Hold on. Oh, shit. Yeah, they split it out. My apologies. Hello. So I'm removing more than what I need. I mean, I'm not gonna lie to you guys. I mean, this is just too damn good. I mean, it can it really be this high? Can it really be this good? Can it really be this good? Jesus Christ. I'm trying to take more out because I'm like, this is too damn good. Right? I'm tired of winning. That's how good it is. Way to keep them honest again. I keep taking away. They're like, no, put it back. Right? No, but that's good. You know, and again, that's why you're a wonderful lifetime member, right? So okay. So they just put it back in here. That they just dropped this and put it back in here, and they're adding this. That's fine. What I did is I double dip. I double dip on the negative because I'm trying to lower Clover. Okay, fine. You don't want to be conservative, but you're correct. Screw it. Holy shit. Okay. Translation, ladies and gentlemen. Get your freaking Lambos. Get your freaking Lambos. So translation, $11.84 million. Holy shit. Woo! Holy freaking shit. Okay. Going back to John. Where are you, John? I feel like I'm going to recite a Bible when I say John. All right, John. This is assuming 30% growth annually. John, listen, John, my friend, John, let me tell you something. Okay. Are you ready? Are you ready, John? Listen, John. I'm doing 33%. John. They're thinking they can grow 37%. Does that make sense? John? I'm taking. I'm taking. I don't want more, right? But if they do miss estimates, then yeah, no, of course, right? Right? I'd rather be conservative. I mean, listen, you see me, B-Rad. I'm just trying to take. I just can't believe. Right? 37. I know. 37. Al going Godfather. Let me teach you, my boy. I'm pulling on Al stock trades. That's all. No, but it's crazy. This is crazy, guys. Holy shit. Like I'm trying to take. And B-Rad's like, no, don't. I'm like, but he's right. I can't argue. All right. Holy shit. Okay. All right. So now let's do Q4. Woo. God damn. Holy shit, guys. Holy shit. This is going to be one profitable machine, man. Holy shit. And they want to know about counterpart. Andrew's like, get out of here. Let me hit profitability first. Andrew, you are a freaking badass, bro. You're a freaking badass, dude. You're a freaking badass, bro. He's like, nah. Dude, this guy's so bad freaking ass, bro. All right. Let's see this one. This one's 3.3. So net loss for this one was 22.092 million. So that's how much the net loss was. So they lost heavy here. So let's see what they're going to be for Q4. Okay. Dude, Andrew Toy is so badass, dude. He's so badass. He's yeah. I saw your comment here. Oh yeah. And then wait till we do 2026 when we increase this shit to 14%. That's the next video we're gonna make. right? And that's going to be like, you see how we're like breaking it up? We're formulating. Whew, holy shit. This is going to be a monster. Everyone's going to be like, the biggest business turnaround. Do you know how much money we're going to make? As of right now, we have about $45 million on our lifetime access, right? I'm telling you, we're going to hit about $1 billion of net worth on our platform. We're going to kill it, guys. We're going to freaking kill it, right? Now you understand when I'm telling you lifetime access is going to be $15,000, $20,000. To get access to this group is going to be very, very lucrative, okay? Holy shit. All right, so now let's go ahead and do the calculation for Q4 2024 to project. Let me go ahead and fix this. There. See? So now let's go ahead and share the damn screen. Right? So there it is. Right? We're going to use these numbers. I'm sharing. See that? B-Rad's like, you better freaking share. Right? So here's the numbers here, right? I'm going to put them here. B-Rad's like, you better add them all, right? I want to know how much money I'm going to make. This is B-Rad right now. Hold on. This is B-Rad. This is B-Rad right now. This is B-Rad. Counting money. This is B-Rad right here. He's like, nah. You keep adding. This is B-Rad. Look at that. Be like, you better add it all there. All right, let's go. All right, so premiums earned 330680. You think other YouTubers do this, or they don't, because they don't know. 6283. Okay. Net claims 243044. Okay. 62737. Okay. 52286. Okay. Holy shit. Dude. You're kidding me. God damn. So yeah, I bought lifetime December, totally worth it since the stuff he's added has been awesome. Yeah, I appreciate you, Rick. Hell yeah, Rick. Hell yeah. No, I'm sorry, but it's okay. We're gonna be hovering around the $4,000 for lifetime, and maybe bump it up to what was the timeline? It was an automatic bump. I think it was like 4,900 or 5 in the next 6-7 months. But yeah, that is 3 quarters in a row. Holy shit. Okay, so that's 2.2. We could say 8 because the 6 rounds it up. Million. Holy shit. Okay, so what we're gonna do is we're gonna go ahead and we're gonna add all these together. And dude, I feel like Wall Street's gonna kill me. Wall Street's gonna be like, dude, get this guy out of here, man. This guy's we gotta get this guy. Oh my god. Right? So this is insane. Right? So what I'm gonna do is I'm gonna add these together, and then I'm gonna take a 25% margin of safety. I'm sorry, B-Rad. I'm gonna cut 25%. Okay? I'm gonna cut 25%. I'm still cutting her. I'm gonna cut 25% just in case. Just let me cut. So we have a buffer. So we don't get too excited, right? It's like, God damn you, right? But don't worry, we'll calculate both. But guess what? Right? What are we gonna calculate? What are we gonna calculate now? EPS, right? Why are we here, right? Let's calculate EPS. All right, lifetime is well worth it. I'm just a newbie at this with only 4K, but thank you, Al, for teaching. Absolutely. Listen. When I first started, I was a 4K. I never had that much. You know what I mean? When I met Michelle, I had $50 in my bank account, man. Holy shit, right? It's like that song, now we drink champagne when we're thirsty, right? We're multimillionaires now, baby, right? We're multimillionaires now. Let's go. Been a student of your videos since 2022. Hell yeah, man. And now we're going to the mountaintop, baby. We're going to the goddamn mountaintop. So now let's go ahead and let's do some magic. So now let's go ahead and let's add all these up together. So we're going to take this number now and we're going to just go ahead and we're going to say, we're going to make it bigger. So we zoom in. I'm so excited, guys. In fact, I'm going to go here because it'll probably look better. So I'm going to say Q1. Well, first off, I'm going to say 2025 net income. Okay. Then we're going to do 2026 later on. But all right, good. Right. Because we already have the guidance. Right. So yeah. So that's why analysts can do this. Right. I'm just teaching how these people do it. Q1 2025. Q1 2025. Q2 2025. Okay, let's go ahead and middle justify this. Okay, so this is what we said for this one, right? So we said, so to do that, we're gonna say I'm gonna put this. Let me just put this number here. I'm gonna take this. I'm gonna say equals this times 1,000. Is that right? 1,274,000. Good. So that's 1 million. So this is the net income, right? I'm going to just say net income, right? And I'm just going to say 2025. See what I'm doing? So that's, yeah, you forgot. Damn, I forgot about Q1. Exactly, right? Time to rebalance my portfolio. I mean, you're seeing this, right? And yeah, shout out to you, brother. Thank you so much for this video testimonial, right? Peter's watching you sipping an espresso martini. Oh, I'm telling you, man, this is a big deal. Big deal, bullies. Big effing deal. Holy shit. Woo. All right. Yeah, this is a big deal. Okay, this is a big deal. All right, so now let's add them together. So this is 30 set. So let's copy this number, or I can't. Let me just take this number here. 37,160. I'm gonna put this number here. I'm gonna take equals. I'm gonna take this number. I'm just converting it to millions. Okay, so I can calculate EPS. Right, that's how you do it. Right. So that's about 37 mil. 37,160,000. And now I'm gonna take this number here. 11,839. I'm gonna say equals this multiplied by 1,000. That's 11 mil, 11.8 mil. And then now I'm gonna take this number here. 2.276. Oh, that's not. I took the wrong one. I need to take this one. 2,276. And you say equals this number here multiplied by 1,000. I'm just converting them to millions. Okay. So now I'm outstanding shares. Okay. So now how many outstanding shares do we have? Well, let me show you where I get them, right? Because it's an educational platform, right? So let's move up here. This is the first quarter of this year. The outstanding shares are here because remember they bought back some stuff. Guys, listen, right after we calculate this, I'm going to show you something else because this shit is going to blow your freaking mind. Like if you think this is good, I'm about to show you something. Like you guys are going to have to go to the doctor to basically give you some depressants, right? Because you guys are all about to have like, you guys are all about to have freaking bipolar after this. You got your dopamine levels are going to surge so much that your brain just can't handle it. Okay, I'll tell you right now, your brain is going to explode so much that you need to you guys need a downer. Okay, this shit's gonna, oh my god, it's gonna explode. All right, so this is right here. We can just copy this. All right, good. So there it is. So then now, let me just actually put this here and let me delete this. So now we're gonna say net income total. Okay. All we got to do now is just take the sum of all these together. And there it is. And then now so what is that? Someone said it.
50 million, 1,000.
Somebody said 50 mil like 5 minutes ago, 10 minutes ago. Right? They already added it. Right? You stole my thunder, right? Okay. So 50 million. $50 million of net income. Holy shit. Holy shit. Okay. Now let's move this. I keep moving this down. Let's move it down. Now let's look at EPS for the year. All you got to do now is take 50 million divided by this. And you get nothing. What the hell is this? Oh. Oh. Two different formats. Let me change the it's an Excel. It's an Excel thing. All right, try again. It's okay. What? Oh, I need decimals? Man, damn Excel. All right, so it does. So yeah, because they're numbers, right? All right, fine. Now let's try again. What the fuck? What the hell's going on here? Oh, because it's the sum. It's the sum. It won't do it because it's a. I see. That's fine. That's fine.
50 million, 1,000.00.
I'm gonna put 50 million here. Okay, I'm gonna put it here because it's a sum. It's a sum. I don't know why it's not doing that. So I'm gonna do this divided by this. I just copied this number, put it here. Excel's freaking stupid. Okay, no, I guess that wasn't the answer. Wait a minute. Oh, I need decimals. That's what you're saying. Guys, I'm so stupid sometimes. You know what I mean? All right. So, you know what? Let me just do this then. There. Okay. Right. As you can see, I don't use Excel that much. I used to. You forget. You forget. Okay. I need coffee. Yeah. Michelle, I'm driving the. I need coffee. Right. So, ladies and gentlemen, we are estimating an EPS of 10. Okay. So now let's look at EPS for the quarter per Q. Okay. So what you got to do? You got to take this and divide by 4. I know this time you got to use decimals. Okay. So you get 0.03. Okay. Which is technically 0.025. Ladies and gentlemen, does this number look familiar? Dr. Patel, there he is. Didn't that one analyst come up with 10 cents or something like that? I thought I saw something like that. I don't know. I think I saw something, didn't I? Yeah, you did. Yeah, you did. Let me take a screenshot. It's right here. It's right here, ladies and gentlemen. It's right here. Average estimate, 3 cents. He's a little lazy. He just said it's all going to be 3 cents, but on average, 3 cents. 3 cents. What do we get? 3 cents. My calculation is a little bit more conservative. 0.025, but we call it 3 cents. That's fine. Look, he's doing 11 cents. You see now how I just went ahead and showed you how to calculate your own earnings per share? Now you know. Now you know how to do it when they give you the estimates of what the growth rate will be for 2026, which is why other people will be calculating it, which is why the stock price will start to trade in the future, not in the past. Okay. So if you take all of this, my price target is $4.99, under $5. I'm just kidding. No, I'm just kidding. Right? It's still under $5 with all of this. Imagine, right? I'm just kidding. All right, but hold on. There's more. That was a joke. Okay, there's more. Okay, it's like that commercial when you watch. But wait, there's more. No, I'm kidding. I'm kidding. All right, so right, it's like what? Okay, so where are we? What did we do? So we started talking about operational cash flow. We said that it will if this goes to zero, then we have to add back 43 million. Remember that? Right? Is it going to zero? No. It's going to 50. Now, if we want, we could take a margin of safety of 25% and we could say 75%. So we could say they're going to be $37.5 million in profitability. Now, obviously, we could do that, 37.5 million. But let's be humble, right? And let's say 50. No, I'm sorry. Let's not be humble. And let's say 50. Forget the margin of safety. Screw the margin of safety for right now, because we're already using the bear case of estimating free cash flow. We're already estimating that, right? We're already estimating that. So there's that, right? So now, if we were to just take this earnings per share for the year and take this and multiply it out by this, what? Wait, sorry, per share. Okay. Now you take this now divided by okay. All right. So I'm just thinking out loud. Hold on. Let me think. All right. That's good. So now that we know that it's going to be $50 million, right, of profitability this year, 50 million. Now, of course, we could say 37 million to be safe, but I think because I'm going to explain why I'm kind of hesitant of being a little more conservative. I mean, you could do it in your own calculations, but the reason why I'm inclined not to be as conservative is do you recall how I took the 34 million here for the bear case? I mean, 34 minus 82 minus 34, that's like 47 million, right? So I think that 47 mil is no longer going to be there. It's discontinued operations. So I'm going to be respectful for that, right? And I'm just going to say, we'll do 50. Okay, so now that we do that, this is the 2025 break-even net income is zero. So now let's go ahead and copy this, and let's go down, okay? And let's go here, okay? Oh, wait. What about 2026? In Arabic, استني شوية. Wait a minute, right? One step, one step at a time. Okay? One step at a time. Because, first we have to, do this, and then we'll go, right? So I think that by the time the end of the year, I'm trying to see what the stock price is going to be in the next 12 months, right? 12 to 15 months, right? So let's see. So this is break. So now we got to do net income 50 mil. Okay, we got to do that. So you remember how I added 43 mil? Why did I add 43 mil, ladies and gentlemen? Because they're going to go to break even. So you can add 43 mil. But wait a minute. Now we're saying they're going to be 50 million. So you know what that means? We have to, because if something improves from negative 43 to 50, how much did it improve by? 43 plus 50, right? Because it's a negative number. So now we have to add another 50 freaking million, right? So now we're going to add 50. And we're going to go ahead and bold that. And then guess what? We have to add another 50 million to the bull case. And we bold that. You're already doing the calculation. You're fast, man. All right, well, let's see. All right, let's see if I don't F this one up. Okay. Then we subtract 19.296. Then we take this number here, we put it here. If you don't understand where I'm doing this, rewatch. If you're just watching now, my recommendation is watch the video from the beginning because I already went over all this. If you don't understand what this is, rewatch the video from the beginning because this is the most important. This is not a video you don't want to skip on this video. Okay, you don't want to skip on this. Okay, all right. 110. Okay, 92. Just like what Neil was saying, 92, 93, right? Okay, so then now let's go ahead and add this one. I know Peter's watching right now. Peter's like, there he is. And by the way, I'm about to show you something that's going to blow your effing mind. Just wait. I'm not done blowing your mind. I'm going to blow before the internet continues that. But let's just continue. Yeah, the internet can be kind of funny sometimes. All right. So we got to do this now here. Okay. Your mind's going to be blown. Okay. The numbers are going to blow your mind. There it is. That's what I meant to say. Okay. So subtract 18.2. Okay. Now remember, everything you see here, I want you to take it and send it to the moon, okay? Because we're not going to have buybacks next year, so that's going to be more cash flow, and we're going to have 14% increase because the star ratings, holy shit, right? And 9% increase, double holy shit, right? It's going to make it right. I mean, I'm already seeing, I'm seeing the money falling. I mean, do you see the money fall? I mean, I'm seeing the money just fall. Oh my God, it's falling everywhere. I can smell. I smell money. I smell it. It's coming. It's coming. All right. Michelle's not here. Right. So this is just not. This is whatever you see now is for 2025. At 3.5, this is 3.5 stars, ladies and gentlemen. We're being paid at 3.5 stars. Just wait. No wonder why Jim Cramer said, I don't want to hurt anybody. I don't want to hurt anybody. Shut up, boy. Shut up. I'm about to show. I don't want to hurt anybody. Get the hell out of here. All right. So, all right. Let's see. So now, Michelle's here. Hey, Michelle, can you lower the AC? No, I'm just kidding. It's good today. It's good. No, she's like, you want some hot dogs? I'm like, no, not tonight. No, maybe Friday when it was red. All right, so let me see. Where are we at now? So what's the lowest range? Now the lowest range gets upgraded from 92 to the highest range of 156. Then we could take the average, which is 156.154 plus 92.121, divide by 2, That's 124. All right, there it is. Oh yeah, my dog, dude. Your dog's dog is getting a chef. Okay, Michelle, get the umbrella. It's raining money. Money. All right, got to go to dinner with the wife. Pausing here. Oh yeah, please pause here and watch back. I like getting blown. Oh, yeah, get ready. It's good. All right. So remember, it's only 2025. All right, good. So now that we know operating cash flow is going to go anywhere between 92 mil to 156 mil with $124 million average, we're going to take this number and we're going to put it in our intrinsic value. But before I do that, let me show you something. Let me show you the money. Whoa, are you ready for this? Okay. All right. I'm going to ask you some questions now. Okay. Michelle, can you make me a cappuccino, please? Can you make me a little cappuccino, please? No, I appreciate you. Come on, please. Don't worry. I'm about to spoil you with a shit ton of Wheel Strategy shares. Right? You about to get so much money. You. How many millions? He said, how many millions in a billion? 1,000. Right? All right. Yeah. No. Yeah. Don't spoil it. All right. B-Rad, follow along. Okay? Follow along. All right. What is this? Cash and cash equivalents. They went from 194 million to 155 million. Did their cash from 2024 to 2025 Q1, did their cash go up or did their cash go down? I can't take it. I'm tired of winning. Oh, yeah. And then watch. Just wait. And I think what Donald Trump's doing right now might actually explode the stock market to the upside. So I'm going to ask you a question. They went from 194 million to 155. Okay, cash flow went down. Is this good or is this bad? Their cash went down. Is this good or is this bad? In theory, theoretically, it's bad, right? It's bad. But you have to ask yourselves, why? Why did it go down? Why did it go down? Somebody tell me. What is 194 minus, take these two numbers and subtract them from each other. I'll do it right here. 155,439. How much did they drop by? How many millions? How many millions did they drop by? They dropped by 39 million. They dropped by 39 million. People are saying buybacks. Where does the 39 million come from? Why 39 million? If you take 194 minus 155, you take this whole number, you get 39 million. They bought back the stock. So now let's see, because this is an educational platform, how do we find that? Where do we find this? You scroll down. This is the balance sheet. You scroll down. You go to treasury stock. It went from 30 million to 62 million. Okay, what's 62,947 minus 30,991? So 31.9 million came from buybacks. 31.9 million came from buybacks. Well, we still got 8 million left. Where did that 8 million go? I mean, we lost 8 million. I don't like to lose money. Where the hell is that 8 million? So we got to go down. Cash flow. This is a negative number, 16.293 million. Then you go cash from investing activity. What is negative 16.293 million minus 8.9 million? Let's do the math. Cash from investing is 8.93 million. You add these numbers. Wow. Holy shit. This lady's trying. She knows what the intrinsic value. She even gave me a cookie. She knows the intrinsic value is coming. She's like, man, I got to hang on to this guy. Right? Yeah. And she gave me a cookie. All right. She even put a goddamn cinnamon on this thing. Holy shit. All right. Okay. Back to the math. Negative 16.29 million plus 8.93 million is negative 7.3 million. Doesn't that round up to around $8 million? So what's 31 plus that? Around 39. Does that make sense? They lost cash because they bought back their shit. Okay? Now, let me explain to you and put it in an easy to read language. If I can find it. Ladies and gentlemen, this is Al Signal. Strategic cash flow behavior that reveals insider conviction. This is part of the Al Stock Trades Deep Dive Educational Research Division. It is part of the SAS coupon code of $1,200 off lifetime access. I'm showing you the research that we do in the Research Edge. So let's go back. And now I made it easy for you now. I made it easy. Let me zoom in. I made it easy for you. In Q1 of 2024, last year, we had $194.543 million. How much stock did they buy? They spent $18.297 million of repurchasing stock in the open market at $3.60. Then they spent $13.659 million in treasury stock acquired from employee tax withholding paid in cash. Let us stop right there. Let us stop right there. What is treasury stock? Treasury stock is issued to employees. They give treasury stock. There's stock and there's stock-based compensation. They give stock to their employees. A certain number of these shares are vested in a tax withholding. Okay? At tax withholding. I'm going to repeat this again because this is very difficult. I need you to listen, guys. Pay attention. So we knew they bought 18.297 million of stock at $3.60. Then they bought back another 13.65 million this year, but they did it in a way that's not actually buying. Let me explain. If you go to the cash flow statement has all the cashes in and out. That is all cash subtracted from the stock-based compensation, which is a contra account from the net income for all my business folks. If you don't understand that, just leave that alone for right now. That's another video. Okay? I don't want to complicate this. So what they did is, you remember those RSVUs when like they sell shares? You remember when they sell, they say that they sold, right? Who are they selling it to? Who are they selling it to? They're selling it to Clover. a certain percentage of that goes to taxes. So let's say, for example, if an employee doesn't meet obligations, they take those shares back. But usually it's for taxes. But you know what Clover did? Clover didn't sell these shares. They bought them back, and the taxes that was supposed to be paid by the shares, they used cash instead. They used cash instead. They used cash to give to the IRS instead of selling the shares to make the money to pay for the IRS. Does that make sense? You have an employee, they get these shares, they sell them, Clover takes it, and then they use their own cash to pay the taxes, and they keep the shares in their treasury stock. Why are they willing to keep the shares rather than sell them? They would rather lose $13.69 million in cash rather than selling those shares. Why are they rather keep the shares? They rather keep the stock. Why do they want to keep the stock? Why are they depreciating their cash? It looks bad. Why do they want to depreciate their cash? Because the stocks are worth more. The stocks are worth more. You understand what that means? The stocks are worth more. Because they know in the next 5 years, those shares are going to be a lot. So they would rather lose the cash now than rather lose the shares. Does that make sense? Because they are undervalued. I'm getting emotional. Yes, this is big. This is big. You understand what this? That's why I released this to the Research Edge. This is the level of research we give to our members. I don't bullshit you. I became a millionaire from homelessness, and I'm trying to teach you to do the same. So then now, let's do the math. $194.54 million in cash in Q1 of 2024. They spent $18.29 million to buy back their shares from the buyback program at $3.60 because they think $3.60 is cheap. Then instead of selling the treasury stock, they got $13.65 million to go ahead and buy back, to give that for taxes. Then you have negative $16.29 million of operating cash flow. Then you add it from the cash flow from investing. Then you have some miscellaneous rounding numbers, and you get to $155.43 million. You see how we balanced it out? You see how now we've taken this number Hold on. Let me go back. Where the hell is the cash? Hold on. Give me the cash. So I can tell you. You see how we have taken the cash from 194 to 155? And an intelligent investor, a master of the stock market, will ask, where did the cash go? They went from 194 million to 155. Where did the 39 million go? And yes, you answered correctly. They bought back their shares. That's what they did. So in conclusion, buying back 18.3 million of its own stock, indicating confidence in future valuation. Using 13.7 million to pay stock taxes in cash while retaining the shares in treasury. Investing operationally while recovering some liquidity through 18.9 million in investment activity. A minor rounding adjustment of 0.2 mil, typical in quarterly financial reports. And this is the take-home message. Clover's leadership is signaling confidence. They're using cash to acquire and hold their own stock, not sell it. This reflects a belief that today's stock price is It undervalues the company's future potential, and that owning more equity now will pay off later. Damn, Al turned into that coach that runs the crap out of you all day, but because he wants to see you succeed. That's exactly what I want. That's the point of what we're trying to do. I'm trying to take you to the mountaintop. I'm trying to make you rich like me. That's what I'm trying to do. So then now, right? So now let's go ahead and let's remove all of these tabs to respect the computer's memory. And let's do our favorite handy dandy intrinsic value calculation. So we'll go here. We go to Al Stock Trades. We go back to the Google Doc, and we're going to use these numbers. We're going to use the worst, the best, and the average. Where do we get these numbers? We calculated it. Watch the beginning of the video if you do not know where these numbers come from. Don't take shortcuts. This is the mastering. This is where all the software is. This is the educational material. The educational material is 5% of the course. The course is not even done yet. My girl gave me some water. She's like, damn, this guy needs some water. I didn't even ask her for water. All right. Opening up the price target software. Opening up Clover. Right now, I'm going to be using a 23% growth rate. There's obviously more to the calculation. Just to make it simple, we're going to go ahead and take 9.33 plus 37% and divide by 2. You divide by 2, you get 23%. Obviously, if they continue growing more than 30%, then Wall Street will evaluate it at 30%. Likewise, for people that wanting to learn, you can also see it here. Wall Street's done this calculation. For 2026, they're thinking 22%, right? 2025, 35%. But I think it's going to be more, right? But let's respect and be conservative. So we're going to change this to 23%. The absolute bearish effect will be 92.1. Obviously, you have to subtract CapEx. That's about 1 to 2 million. Who gives a shit? We'll just use 92.12 million. Okay. You update this right now, ladies and gentlemen. You get a price target of a bear case of $5.47, a base case of $7.37, and a bull case of $10.60. I showed my IT bro your platform software, and he was blown away. You have to ask yourselves, ladies and gentlemen, how the hell did I learn how to code? When I was homeless, I was at the Hayden Library in ASU, and I went to all the libraries, and I learned how to code from MIT Open Courseware, right? That's where I learned how to code. All right. Now, this is the bear case. Let me give you the bull case. 156.15 million. Again, this is only for 2025. 2026, you have an increase of 5% and another increase of 9% because of Trump. You have an increase of 14%. It's huge. We're going to do that to another video because this only gets even better. But right now, we're just doing 2025. So we go ahead and do 156.154. You get a base case of $12.49 and a bull case of $17.98. You see that? Juan saying, don't forget that share count. All right, fine. We'll decrease the share count. Remember, if we decrease the share count, that means the stock price goes up higher because it's less pizzas to share with. $4.97. That's fine. Stock price goes up higher. So $12 to $18. for 156 operating cash flow. So what happens now, let's say, if it grows to 37%, or I think in the future, this will be the case. You start to see $32 to $48. Are you starting to see that? The portfolio that I have, you'll see it'll go up to $10 to $15 million. Okay? So there it is. So we'll take the average to be humble. We'll take the average 124 mil. We'll put it here, 124.14. We'll do 23%. Ladies and gentlemen, if these assumptions play out to be true, and I believe they will be, I'm upgrading my price target now. I am upgrading my price target. In the next 12 to 24 months, I believe we are going to see a stock price of anywhere between $10.14 to $14.59, ladies and gentlemen. My stock price is anywhere between $10.14 to $14.59 in the next 12 to 24 months, in the next 1 to 2 years. There it is. How much is Lifetime now? Lifetime right now, so we just increased prices. It is $4,000. However, we have this coupon code, which is one of our biggest sales, which is a coupon code SAAS. But by the way, these price targets do not include SaaS. They do not include SaaS. Understand that. So it's you get a $1,200 off. So it drops lifetime access to around $2,800. And you could use it's one-time payment, lifetime access to all the software, every software that you see, everything we have is included, including access to over $45 million of net worth that will soon be $1 billion of net worth in the future. You'd use SaaS, you put it in the coupon code, you get $1,200 off lifetime access, and it's alstocktrades.com. You can use a firm to essentially be able to finance it, so it's lower monthly payments, but you own lifetime access. Once you finish off the payments with a firm or PayPal, you'll be able to basically, that's it. You own it, right? And you'll own it from the beginning because, you've already paid for it through a firm. Okay? So there it is, ladies and gentlemen. So if you guys want to change your life, if you want this type of due diligence, this type of research, if you think this is good, wait until this portfolio turns into a multi-million-dollar portfolio. It's currently at $1.1 million. A couple months ago, it was at $1.42 million. Look at that 420 right there, right? Ladies and gentlemen, once this gets to its intrinsic value and potentially beyond its intrinsic value, we will be able to do the wheel strategy where we will be able to make anywhere between $200, $300 to potentially $1 to $2 million per month, depending on the options chain. Anywhere between $200 a month to on earnings month to potentially $800 to $1 million to $2 million a month. This is the power of the platform. This is the power. I went from nothing. I went from homelessness to where I am now. There he is. Tell your buddy he's welcome to the family. It has access to also perks. My family owns a golf course in Ahwatukee and also a golf course in Oregon. My future father-in-law has a net worth of over $500 million. I've learned from the best. I have learned from the best, and I will democratize what I know to you. Understand that. And for the people that are in lifetime access, it'll be an exclusive club. It'll be an exclusive club. We'll be welcoming you there, brother, okay? The wheel strategy is what I want to learn, and you will. You're part of the community, right? Brother, that right there is good enough. You're young, that right there is good enough. Then you go in and you just, once you understand Wall Street, you'll be able to compound that. All right? Ladies and gentlemen, God bless you all. Enjoy your Saturday. Happy mothers to all the mothers out there. Shout out to all of our women in the stock market. Shout out to Sarah. God bless you. Shout out to my mentor, Dr. Patel. I love you a lot. God bless you all. And that's it. Let's make that goddamn money. I'll see you on the next one. Hold up. This is the wrong fucking song. Let me play the right one.
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gone sway. In this game, no more bills to pay. Through the highs and lows we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong.